The famous investor Peter Lynch said that when insiders are buying, it is an extremely bullish signal because they believe the share price will go up. Today we're looking at 4 recent insider buys. The first one is Nike stock. As we can see, the director just last week bought under 3,000 shares for around 226,000 in totality. When we take a look at this company, we covered this in detail after their drop on the earnings. Over the last 12 months, they are down more than 30%. Over the last 10 years, however, they are up around 95%. Even if you reinvest those dividends, well, you would be up marginally higher. You still would have underperformed the S&P during this time. And we do note all-time highs does sit somewhere around the $180 mark around 3 years ago. We also note they are now trading right there towards their 52-week low. Wall Street does indicate this company as a buy now, although Seeking Alpha and Quant do clearly show a hold. In terms of the forward yield, well, just below 2%. In terms of the forward P, it does sit at 23.5, marginally higher than the S&P's 22.5. Now, when we do take a look at this company, in terms of the dividend safety score, it does sit at 99, and they are a growth company in terms of their dividend. They do offer some nice increases. The more recent one that we have noted is high single digit, 8.8% in November 23. Now, when we come to the valuation of Nike stock, as always on this channel, and if you do see the deeper dive, we do run into each one of these models. Today's episode, we just want to show the intrinsic value. Now, it does come to around $100. With the current price at around $75, we always on this channel use an MOS level of 10% is what we like to start off with, and we execute on that if it meets our 3 golden criteria. Those are a wide moat, strong financial metrics, and good forward-looking data. Well, if you believe that for the stock, it is a buy at around $90. Then we keep going till it's near that current trading price, and in today's episode we can see it is bang on a 25% margin of safety, which is very attractive for this company if you do believe in it over the longer term. We also note Wall Street do have their price target, $98. They consider this a buy with 31% upside over the next year. The next insider buying that we have seen is Simon Property Group. In fact, we see several buys across the directors just last week, ranging from a few hundred shares, as we can clearly see here, and we're talking around a few $100,000. Now, when we take a look at this real estate investment trust, we also get a buy rating from Wall Street, a double hold from the other 2 analysts, and this one is trading right there at the upper end of the 52-week range. It does offer a yield of 5.4% and a P to FFO of 11.65, which is lower than the sector P for real estate. Over the last 12 months, well, very strong, up 25%. Over the last 10 years, if you have been a shareholder, however, you would be down around 13%. And we can see the all-time highs for this stock does sit essentially around that $230 mark, but we are talking around now 8 years ago. When we do also take a look at this company's dividend safety, it does sit at 60, borderline safe, which we can dissect in another deep dive if this does interest you. But what is nice to note for a REIT, that is a fairly high increase to their dividend, 8% just over the more recent full year. Now, when we do take a look at the valuation for this company, we get to $176, with the current price around $146. When we do use that 10% margin of safety, we do see a buy at around $158. When we go to 15%, we can clearly see that is the MOS level, because at 20% we would have to wait for around $140. But we can see in today's episode for SPG around 15 to 20%, whilst Wall Street on the other hand do indicate upside of 14%, but their price target does sit at $166. Also, just to let you know, we are releasing on Monday, to those that are subscribed to the newsletter, 49 Dividend Kings. We're running through a lot of information talking about our price target upside, as well as whether we see this as undervalued and a buy now. If you do want to grab this on Monday, you will need to be subscribed to the newsletter, and that will also give you access to all of these other articles as well that you can read, every single one, all completely free and instant access. Now, when we take a look, we have more buying of Marvel Technology. Just from over a week ago, the director did buy around $100,000 worth, as we can see, over 1,400 shares. And this is one which is interesting because we also note a strong buy from Wall Street, a buy from Seeking Alpha, with a hold from Quant, again in the semiconductor space, trading in the mid to upper end of the 52-week range. It does also have a yield, although fairly trivial, 0.33%. Over the last 12 months, up around 18%. Over the last 10 years, if you are a shareholder, very nice performance, up 412%. Again, this would have outperformed the S&P during the last 10 years. And we also note all-time high does sit around $90 in December 2021. Now, when we look at this company, their borderline safe score of 42 is something we have discussed. Again, let us know if any of these companies you would deem to be justified for a deeper dive. And this is one that we are waiting for their next full year increase to their dividend. When we do talk about this company and the valuation, well, our intrinsic value comes to around $90, which does indicate, given the current price of $72, that there is some nice MOS. So at 10%, then a buy at around $81, at 15% around $76, and at that 20% level is pretty much where it is at. This is definitely one to consider for any portfolio, especially if you are lacking some exposure to this industry. On top of that, when we do look at Wall Street, they are bullish on this company, not only a strong buy signal, but we can also see they believe the share price around $91, marginally higher than our intrinsic value with some nice upside of 27%. As always, do let us know your thoughts about these stocks if you are adding to any of these. Maybe you're selling in fact, or maybe they are just on that watch list. The next one we are talking about is Salesforce. Again, some more buying. The director on the 21st bought around 2,000 shares, and this was around $500,000, so a fairly large amount for Oscar Munoz. And when we take a look at this company, it has pretty much recovered very strongly from the lows when we did cover this after their earnings drop. Now sitting in the midpoint of the 52-week range. It does get a double buy, seeking alpha on Wall Street, and we do note quant have given this a hold. Similar as well to Marvel Technology, a fairly trivial yield, 0.15% on a trailing 12-month basis. P sitting at just over 26. And over the last year, very nice, up 25%. Over the last 10 years, when we do look at this, just under 400%. So again, another one that has essentially outperformed the S&P 500. When we talk about their dividend safety, well, they don't actually currently have a score. This is, as we can see, a fact. They've only just started recently paying a dividend. So when we do get that score, we will update the community and let you know. When we look at this company in terms of the valuation, well, we get a figure around $321. What this means, given that current price of $265, again, nice margin of safety for Salesforce. At 10%, this would be a buy around $290. At 15%, around $273. And as we can see, this isn't quite there at that 20% level yet, but it is sitting somewhere between 15 to 20%. And every time we do take a look at this company, the share price does tend to increase even just over the last few weeks. In terms of Wall Street, well, they see upside around 15%. Their price target, as we can see, $304, so they also see this as one of those buy now. Finally, there are also some other smaller cap companies where we do see a lot of insider buying. None of these we are going to go through today, but if you do see any that do catch your attention, that do believe should have a deeper look, do let us know. As we can see here though, today we have run through Nike, Simon Property Group, as well as Marvel Technology and Salesforce. As always, if you did enjoy the content, value was provided, smash that like button, hit that subscribe and bell button, and as always, we'll see you all on the next one.